they have actually so little. Many DMCs are leased bank, primarily due to weak infrastructure, digital infrastructure as well as physical infrastructure, high cost of delivering services. They have also very little financial literacy, as well as some have geographic challenges. In this digital age, the role of technology has also been identified as a critical partner to promote greater financial inclusion, which means that promoting digital finance and fintech are also important. So we must bring innovative financial services and products to reach women, youth, MSMEs, and the poor. Another aspect of financial inclusion, which has also been mentioned, is the role of education, the role of financial literacy, and consumer protection. So today we are quite lucky to have 4 of our colleagues from the economic research, from PSOD, from Southeast Asia Regional Department and SDCC, who are experts and are doing work on inclusive finance. So let me introduce them. First, I'd like to introduce Shigehiro Chenozake, who is a senior economist at the ADB. Shige supports the ADB in improving small and medium-sized enterprises' access to finance through various technical assistance projects. His advisory and research expertise also includes policy issue in SME development, inclusive finance, and financial sector development, especially in developing Asia. Prior to joining the ADB, he held several expert positions at the Japanese Ministry of Finance, OECD in France, and as JICA expert in Indonesia. We also have with us today Ms. Christine Engstrom, who is a director at the Private Sector Operations Department of the ADB. Christine is primarily responsible for managing the team that provides funding to non-banking institutions throughout the ADB developing member countries, as well as trade and supply chains finance. She also supports private sector development with a focus on inclusive finance. Prior to joining ADB, Christine worked at Fannie Mae for several years in the Capital Markets Group. She has also held positions at Overseas Private Investment Corporation and the IFC in Washington, D.C., where she worked on investments in South Asia. We also, with us here today, Ms. Purnima Jayawardana. Unfortunately, she cannot show her video, but she is there. Ms. Purnima is a financial sector specialist in SEPF, and she has been involved in ADB's financial inclusion intervention in Southeast Asia region, in particular in Indonesia, and she will be sharing her expertise. Last but not the least, we have Ms. Yoni Jong, who is a senior digital technology specialist with the Digital Technology for Development Unit of SDCC. She has recently joined us from Singapore, but has yet to travel to Manila because of the border restriction. Yoni is a digital technology public policy professional with nearly 20 years of international experience. So before I invite the speakers to share their view, Hannah, do you want to play the short video, 2-minute video on financial inclusion?
Today, some of the world's poorest people remain shut out from using traditionally costly financial tools like credit, savings, insurance, and transfers. Data from 2014 showed 2 billion people worldwide don't have a bank account. More than half of those live in South and East Asia and the Pacific. Some countries, including China and India, have drawn people into the banking system by establishing no-frills accounts. Technology also helped. Mobile phones allowed services to be delivered digitally more cheaply. Networks now reach more than 90% of the population of developing nations. Already, recent years have seen an explosion in bank account ownership. Millions of new accounts were opened in India and China. And in Indonesia, account ownership among the poorest 40% doubled. The data shows improvement, but there are new challenges now. The gender gap in developing economies remains an issue, especially in South Asia, where it's largest. And and some of the poorest people lack the mobile phone technology, literacy, and official documents to take advantage of the digital era. They can also face social and cultural barriers to accessing financial services. There's still a ways to go to attain financial inclusion and universal access to safe, sustainable, and affordable services.
Thank you, Hannah. So that was a very interesting short video. Now let me call on Shige. Shige, I would like to give you the floor to discuss the role of financial inclusion in achieving inclusive society as well as social development goals.
Okay, then thank you, James, and hello everyone. So good afternoon. Actually, the role of financial inclusion has been increasing so further during the post-COVID-19 to bounce back the national economies and also move forward the sustainable development goals. So especially addressing the goal 1 on no poverty and also goal 8 so on decent work and economic growth. The economic growth in developing Asia had been slowing, so even pre-COVID-19 period. Due to this growing global trade tensions. But the pandemic exacerbated this trend further. So declining sharply from 5% growth in 2019 to minus 0.1% in 2020. So as you know, this ADB forecast 7.2% rebound in growth of Asian economies in 2021. But it is accompanied with downside risks of the economic growth, caused by the prolonged pandemic. So as commonly recognized, MSME is micro, small, and medium-sized enterprises and the backbone of this national economy in developing Asia. They normally stimulate domestic demand and create jobs and enhance innovation and competition. So that's why MSME development is very much the key policy agenda toward inclusive growth in the region, and also a very important segment to foster for meeting the goals under the SDGs. So actually, amongst several constraints on MSME development, limited access to formal financial services is a top concern among MSMEs in developing Asia, and the structural problems impeding their growth. The MSME credit market in Southeast Asia is very much small in scale. For instance, bank loans to MSMEs average just less than 15% of country's GDP, and also around 17% of total bank lending during 2010 to 2019. So according to our Asia SME Monitor 2020. So from the beginnings of the pandemic in 2020, we have monitored MSME business environment and policy interventions in selected 4 countries, namely Indonesia, Laos PDR, Philippines, and Thailand. The survey result indicated that MSMEs faced a serious lack of funds at the beginnings of the pandemic, and it became as a big barrier to retaining their business, particularly in micro enterprises. So our follow-up surveys conducted in March, April 2021 revealed that this condition has tangibly improved 1 year after the outbreak, but working capital shortage in 3 to 6 months has risen among MSMEs in the year of the pandemic. So also our surveys found that MSMEs have not changed their normal approach to raising funds, even during the COVID-19 crisis. So they mostly rely on own funds and also borrowings from family, relatives, and friends to survive during the pandemic. So this condition remained the same 1 year after the outbreak. But the good news is their dependence on informal financing has decreased. Instead, their access to bank credit has gradually increased at the time of this latest surveys we conducted. So basically supported by government initiatives like debt restructuring, reduced interest rate, and special guaranteed loans for MSMEs like that. So throughout the year of the pandemic, so MSMEs have strongly desired debt finance assistance from the government. So in particular, most MSMEs wanted concessional loans, including zero interest rate or collateral-free loans. So just considering this, the impact of COVID-19 is different by type of farm operation and size and sector. So we are just suggesting DMC governments to further elaborate the phased approach and differentiated policy measures with considering the ways not to bloat the national budget. So it should address creating this base of innovative entrepreneurships conducive to this economic bounce back, and also providing some more growth capital to them. So by making the best use of capital markets, for instance, because so SME is a very generic term. So having this several types of MSMEs with different characteristics. So type by type of MSMEs need to elaborate this strategy and policies to support MSME business. So just to bounce back. So after this COVID-19 era. So also maybe later my colleagues will discuss assistance for digital transformations of MSME business. So especially informal sectors is also very much important to policy priorities post COVID-19. And also this may facilitate these more formalizing the informal sector, informal MSMEs to MSME, to formalized fund, which means these we can expect more productivity through these MSMEs and then contributing to the bounce back to the economy. Okay, so that's just this overview. So from the beginnings of this webinar, it would be good to share with you. So thank you so much.
Thank you, Shige. That was actually very heartwarming to hear that their informal lending has been decreasing and bank lending has been increasing right after the pandemic. So I think that really means that MSMEs are better off. Let me go to Christine. Christine, in your work with the private sector, what have you been seeing in terms of the challenges faced by SMEs, low-income families in trying to access financial services and products from financial institutions? And how have they changed during the pandemic period?
Yeah, so thanks so much, and hello everyone. I'm very happy to be here today. So I think to understand the impact of COVID, that it's important for us to distinguish between the MSMEs and then the low-income households. And of course, within the MSMEs, they're differently impacted by the sector in which they operate. But the SMEs have had more significant business turnovers and to some extent, turnovers in terms of their hired labor. And then the collapse of the supply chains, to the extent that they're involved in that, has also severely affected them. As well as then they have very slim cash buffers there. So therefore repayment capacity has been pretty stretched. And that's where you see the government programs starting to come in and to help them as well too. But if you look at the impact on the individual households, we're actually seeing that they've been proven to be more resilient, particularly if they've been active in the agribusiness industry and you don't have the weather impacts, or they're not locked into kind of key value chains there. So we know that actually both MSMEs and low-income people have traditionally had difficulties accessing, pure private sector lending, and due to a variety of issues as Shige has outlined, and which we all know about in terms of lack of documentation, their own skills capacity, and then on the banking side, a perceived real and perceived risk of financing these lower income segments. But there's also, of course, differentiation in terms of the treatment of the microfinance industry, which has been very healthy in certain countries such as India. But right now, with deteriorating asset quality, despite the masking of the government moratoriums and deferrals, coupled with weakening capital adequacy in the banking sector, as well as just overall lower rates of business. From our side, we're seeing that the banks are naturally becoming more risk averse. So what we're seeing is that the banks are overall slowing their lending to MSMEs as a consequence. So different data points are now emerging to support this trend. So an IFC survey was conducted about 7 months into the COVID pandemic, and it was covering about 149 banks over 65 emerging markets. And of these respondents, then 62% had flagged that they had overwhelming concerns over the MSME segment and that risk. And that was the highest concern that was voiced. And also we're seeing in countries where there has been some economic growth, for instance, in Vietnam, and where there's been growth in lending of about 2% during the first half of 2020, we're still seeing lending to SMEs declining by about 1%. Now, in terms of lending to low-income people through microfinance, so now we're talking about the household aspect of it, our experience mostly comes from India, and that's through our microfinance risk participation and guarantee program. So MFIs have definitely experienced declines and then recoveries through the various different waves of COVID in India. And the bulk of their borrowers tend to be in rural areas, which during the first wave was less impacted. Now during the second wave that they're coming out, we're seeing a little bit more impact. And also because a large number of the MFIs in India still do group lending, so that's relying upon then in-person meetings, collections, financial literacy training, then that's hampered their disbursements and collections. But then as those lockdowns have risen, though, we're seeing then resilience and coming back to actually almost full level collection levels as well as disbursements. So I'll stop there. I just wanted to provide a little bit of an overview of what we're seeing in terms of those different categorizations. And then we can talk a little bit more about what we're doing going forward.
Thank you, Christine. I agree with you. This distinguishing between the SME and the household is really very important because they have different issues and challenges. Now, let me move on to Purnima. And Purnima, my question is, in your work in Southeast Asia Regional Department, in particular in Indonesia, what have you seen in terms of the challenges faced by households, women, youth, small business in trying to access finance? And what has ADB been doing to assist these different sectors get access to financial services and products? Purnima?
Thanks, James. Thanks very much for this opportunity also. And I think this is really an interesting topic, as we all know that financial inclusion is considered as one of the key drivers for achieving SDGs. But based on the pandemic, that I believe that pandemic has shown us very clearly that financial inclusion may be a necessary condition to eradicate poverty, but on its own, it will not end hunger, achieve gender equality, or achieve other SDGs. And this has been the case in Indonesia as well. So I would say that even prior to the pandemic, that financial inclusion efforts are still a great distance from the goals. For example, the government of Indonesia had set over 75% of financial inclusion targets, but based on the financial inclusion levels according to the Global Findex data, it was still around 50%. But even though they have some increase in numbers based on the national targets, National Financial Inclusion Surveys, which was using some different methodology. As you also highlighted in the video, that almost 2 billion of adults worldwide remain unbanked. So this has been Indonesia is one of the countries having a large number of unbanked population. Even they have been making quite a lot of progress across Southeast Asia. And we also should keep in mind that when we discuss about Findex survey results, because they are coming from a fairly small sample size, so the financial inclusion rates that we see nationally can vary sharply and downward when the population is rural, uneducated, and young or old. And when we also discuss about the groups like immigrants or minorities, for example, in addition to the gender component. And we have seen that large segment of the poor do not have any safety nets and also any other measures to endure any economic shocks. This is due to the pandemic, and it can be even the other reasons like economic downturn or job losses. I remember that there was this statement from Microcredit Employment Handbook that it says the poor live on the edge of disaster and frequently fall into it. So this is actually really the case when you are looking at global index data that 39% of the world population has no ability to come up with any funds in an emergency. Not only does this mean that 39% of the poor lack savings, but also means they don't have any means to borrow. So we don't have specific numbers for Indonesia, but this is generally the case. And also, in terms of speaking, MSMEs generally, they are the key drivers of economy in many developing countries, and this is the case for Indonesia as well, because where ADB provides a lot of support for financial inclusion, and MSMEs are actually supplying around 97% of the total jobs in the country, and nearly 50% of the MSMEs are women-owned. Though Shige mentioned some positive trends, still much more focus needs to be dedicated to increasing their access to financial services, along with providing other business development services to facilitate their growth, stability, and resilience in times like crisis. And also, I think what the pandemic has most starkly illustrated is that far too many of the world's population, and including MSMEs, which is also the case of Indonesia, are not at all resilient. So I believe that we need to direct greater attention towards achieving resilience via financial inclusion. So on the positive side, the manner financial inclusion is promoted can create a direct path towards poverty alleviation and the achievement of most, if not all, the SDGs. For example, through our programs in Indonesia, we have been highly focusing on responsible financial or digital financial inclusion, which means there's also a strong emphasis on financial consumer protection, financial literacy, as well as increased access to financial services through innovation. So to address some the multidimensional challenges present in financial inclusion in Indonesia, our most recent program, which is called Promoting Innovative Financial Inclusion Program, focuses on three reform areas with innovation as a central characteristic. First, actually, we are having the right tools and infrastructure for financial inclusion is essential. And under this reform area, the program assists the government and also the Financial Services Authority to design evidence-based policies to promote a cohesive and coordinated approach to financial inclusion while enhancing the supporting infrastructure and improving the outreach of financial services. And some of the actions that we supported include the approval of presidential regulation for the financial inclusion strategy for the next 5 years, and also piloting Indonesia Financial Access Map, which helps to map and analyze financial access points, which is used to inform financial inclusion policies, and also the launch of Indonesia's Payment System Blueprint 2025 and implementation of reforms to support more inclusive payment ecosystem. And under the second reform area, the program focuses on improving access to finance for underserved groups. This reform area especially helps the government to focus on facilitating greater access to finance for MSMEs and other marginalized segments, including women, youth, and rural communities, as well as those vulnerable to the adverse impacts of climate change. And it also encourages private sector collaboration and also innovations. And some of the actions that we supported under this component include the adoption of alternative credit scoring framework to enable broad-based credit scoring mechanism for lenders to provide more lending to MSMEs, and the launch of fintech lending data center to increase availability of up-to-date MSME credit information, and launch of women's financial inclusion strategy as well as youth financial inclusion strategy. With this, actually, Indonesia became became the first country in the world to have dedicated financial inclusion strategies for women and youth. And under the last reform area, which is focusing on supervision and consumer protection measures for responsible financial inclusion, we include improved access to redress for financial consumers. And this reform area also helps the governments to strengthen financial sector governance, consumer protection, and financial literacy, particularly in response to the growing challenges related to the fintech sector, which can result also in financial exclusion. So some of the actions we support include high-level strategy framework on RegTech and SupTech to enable more cost-effective data-intensive supervision and regulation, and also the launch of coordinated effort to consolidate existing 6 separate alternative dispute resolution bodies into a unified system, and also the approval of Indonesia Fintech Association as an SRO, self-regulatory organization for digital finance innovations to complement OJK's market conduct supervision. And this program also had some unique initiatives supported by ADB. One is a geospatial financial service mobile application called Lokaseki to assist consumers to locate branchless banking agents and other financial service providers. And also Eastern Indonesia Financial Innovation Lab, or IFIL, to promote collaborations between the regional development banks and the fintech sector to design and create new products and serve new markets such as women, youth on MSMEs, especially in agriculture and tourism industries, and also to increase resilience of BPDs to the impact of COVID-19 pandemic. And we also had some other programs on financial literacy, such as the Y Bank, which is an experiential financial education program for youth. So all together, so the ADB and the government of Indonesia are taking a holistic approach to financial inclusion as a means to promote inclusive and sustainable development. I'll stop here. Thanks.
Thank you, Purnima. Responsible digital financial inclusion, that really sounds very interesting. And it seems the 3 pillars that you've identified in terms of infrastructure, financial literacy, and consumer protection are really critical. Let me shift to Yoni. Yoni, I think with digital financial inclusion, I think a lot of people are saying that technology really plays a big role in terms of bridging the gap between the banked and the unbanked. So in your work in this area, what are some of the recent lessons from countries? Is this really the way to go? Can countries really leverage on technology to increase the coverage of population for financial services?
Thanks, James. And just to answer your question first, of course, the answer is resounding yes, but with caveats. And I think it's important to sort of unpack the experience of digital financial services in the region to distill lessons learned so that we as an ADB could support our DMCs in charting the future to make sure that they can really leverage digital technology to promote financial inclusion. So just on the, and before I start my sharing, I just wanted to provide some context. So as James mentioned, I'm still quite new to ADB, so most of my sharing really comes from my former career, which was with a global mobile operator with presence in various emerging markets in Asia, and this operator happened to be majority owner of some of digital financial services providers, namely EasyPaysa in Pakistan and Wave Money in Myanmar. So just wanted to make sure that I share this from the outset as a context. So whether digital technology is a way to go or not, I think the discussion now is sort of past the point, and I think digitalization is really an imperative for all countries, regardless of the sector, whether it's as well as for objectives, whether it's for financial inclusion, poverty reduction. I think digital will play a big role, and we've seen the pandemic has really induced the digital shifts in the way we work, in the way we do business, in the way we study, and we socialize, right? But the caveats come in multiple different levels. But let me first share that the digital divide in the region is a long-standing issue, and that's some of the work that I'm currently focused on in improving and really boosting the digital connectivity capability of the countries that have been highlighted during the pandemic. But I wanted to focus more on the role of digital financial services and whether we can find some of the solutions that the countries are looking for in closing the digital financial exclusion gaps. Right. When it comes to digital financial services, don't think that this is there has been a definite shift to digital in financial services. It's been ongoing for a long time, and what we see in terms of data, especially from reports like Economy by Google, Bain, and Temasek, is that the take-up of digital services in Southeast Asia has really increased during the pandemic, and 1 in 3 of the all digital services consumers are new to the service. Many of them are from non-metro areas, and majority of the 9 out of 10 of these new consumers have said that they will continue to use these services post-pandemic, right? And when you dig deeper and look at the digital financial services and what has changed during the pandemic, is that we do see a huge increase in digital remittance, right? And we also see more financial services going digital with the increase in mobile banking apps, as well as downloads of and use of these apps, right? And as well as frequency of e-wallet transactions rising rapidly, right? And I don't have the data, but a lot of merchants have also started accepting digital payments, right? So we definitely see the shift. These are all good news, right? But if you look at the actual what kind of services that are being offered over digital platforms, we see that these are still they still remain at the very entry level of financial services. It's the remittance or payment. When it comes to insurance or lending, these are still very limited and hasn't really grown. I won't get into the lending part because the reasons for the lack of growth is really tied to everything that the former panelists have shared. And we do expect to see non-performing loans to spike once government's moratorium, loan moratoriums end in various countries. And when it comes to insurance, mobile insurance, a lot of telcos are looking for partners, and other consumer platforms are looking for partners to create more micro insurance products, and some uptake in health and life insurances. But overall traction is downward because there's a general slowdown in travel and motor insurance, which are more popular products, right? So in short, digital is the way to go, but we're still remaining at the entry level. Yes, I wanted to when it comes to digital financial services. If you look at the players that have entered the market in the last decade or so, initially we've seen either a bank-led model or tech-led models, but in the last decade we've seen a lot of fintech or super apps entering the digital financial services, and whether this increase in players have really improved the digital financial services, I think merits a critical review. More players in the market should automatically translate to more competition and better price, better quality for consumers, and therefore increasing the access would be sort of the logical logical development in the market, but because of the type of players that are entering, a lot of VC-backed fintech players, their current disposition is not necessarily toward improving the digital financial access to the low income. We of course see a lot of players that are purely focused on low-income population, and that's a good trend. But I think it's worthwhile taking a critical look at the current market dynamics and the players that exist, and where where the market failures still exist in terms of reaching the low-income and marginalized groups. And lastly, digital is not silver bullet. The analog frameworks. So this would be either regulations around e-money, licensing, consumer protection, data protection frameworks. Those all play a role in making sure that this financial inclusion services, the innovative services, can reach everyone that we'd like to serve. So I'll stop there, and yeah, happy to take any questions.
Thank you, Yoni. By the way, for our audience, you may actually raise your hands if you have questions, or you can also post the questions on the sidebar in our chat box. So let me go back to Shige. I think Yoni has mentioned that there is an expectation that once moratorium or regulatory forbearance by banking industry is lifted, there'll be some issues related to non-performing loans and repayment of credit to MSMEs. What do you think are the policy recommendations to make sure that while we want to promote financial inclusion, that they are also viable and commercially viable and not a risk to the banks?
Okay. Okay. Thank you very much. Yes, actually, so there are many things. Yeah. Actually, as mentioned in the beginnings of this webinar, the COVID-19 impact is so different by the type of the farm operation, the size, and the business sector. So addressing also specific groups like women-led MSMEs and internationalized MSMEs with different coping abilities to the pandemic crisis. So these governments will need to further strengthen the phased approach and so differentiated policy measures. So with ways not to support national budgets, so given the prolonged pandemic. So accordingly, the financing options for MSMEs should be more diverse. So beyond the traditional bank credit, so including the development of digital financial services and market-based growth capital funding venue, so like a specialized equity market for MSMEs, so as to rightly respond to the demand of the various types of MSMEs. Actually, so there are so many issues and the challenges to move forward this financial inclusion agenda, and also the need to have some more tight cooperations among the DMCs. And actually, it may be very debatable issues, but I'd like to raise one issue about the challenges for financial institutions facing during and post COVID-19. My perception is for banking sector, the deteriorations of the bank's balance sheets would be one of the concerns post COVID-19. So central banks' assistance, such as the large-scale capital injections to banks like Cambodia, Indonesia, and China, did in the beginnings of the pandemic, may keep banks' balance sheets safe and sound. But the government may encourage the banks to strengthen their self-funding rather than capital injection, such as this issue of asset-backed securities based on this MSME loan assets. So if the situation is permitted, given this prolonged pandemic. So actually, our surveys indicated that these government quarantine measures created two streams of business clusters. So one is this group of contracting firms hurt badly by the pandemic, and the other is the group of firms benefited from these quarantine measures. So like sectors that responded to the demands during the pandemic, such as ICT, food deliveries, and healthcare products. So although the number of MSMEs benefited from this pandemic is still very much limited, but developing a structured financing scheme based on profitable MSME loan assets, so maybe it's worth considerations as a brainstorming. So just considering this post-COVID-19 era. Yeah, so this is debatable, but maybe it's one of these ideas needs to be elaborated during this policymakers. And also, so one more thing, quick thing, for MSMEs, definitely access to finance remains a very big challenge to survive during and post-pandemic. So in developing Asia, the government and central banks have launched several concessional loan schemes, special funds, and also refinancing facilities to encourage MSMEs to access new loans during this crisis. So however, our survey indicated that the usage of government assistance programs was so limited. For instance, MSMEs in Indonesia reported that they recognize the usefulness of government programs such as credit guarantees and concessional financing schemes and income tax breaks facility like that. But they also largely unrelated to the government programs because mainly they don't know this procedure to apply. That's a very much a fundamental issue. So this suggests that the establishment of a comprehensive information platform on government assistance programs will be required to improve the level of implementations of government programs. So there are so many issues to be considered post-COVID-19 and also still during the pandemic. But I want to raise these issues for your consideration. Thank you.
Thank you, Shige. I really agree that I think the information asymmetry in terms of what the possible borrowers know and what the lenders provide is quite a big gap. And I think there's room for technology to be applied to narrow that information asymmetry. Christine, let me go back to you and also ask a similar question because earlier you mentioned in one of the survey about 62% of lenders actually flag risks for MSME. In your experience in the private sector, what are you doing to try to address some of these fear or risk coming from private lenders in terms of ADB program? Are we doing something to assist that this issue of potential risk be mitigated?
No, thank you for that question. And I think, it's a one ADB approach actually that needs to happen in terms of growing access to finance to MSMEs. In terms of wholesale consumer protection for them, financial literacy as well as digital literacy as well too is really important for them. For banks to become comfortable with them, and also with the turn towards more fintech usage and more data collection, I think then there'll be more data that will be able to be analyzed so they can better understand the segment and the particular credit risk, and also to develop credit scoring as well too. So I think those are some important, just kind of broader components. So in terms of what we're doing to expand access to finance for MSMEs, I mean, traditionally, PSOD has targeted MSMEs. I mean, we continue to do so through credit lines to financial institutions throughout the COVID period. If you look at the deals that we're doing right now, the bulk of them are for MSMEs. Now, there is a fair amount of liquidity in the market, as we know, and that's due to a strong deposit growth. We do know that there'll be more rising demand at the end of next year for MSME financing from banks, and they'll need to diversify their sources of funding and move more into long-term funding again, which is where ADB falls into place. Also, as Shige was talking about earlier, there will be definitely a fair amount of impact on banks' capital adequacy as we see the results and the impact of COVID rolling through their balance sheets. So in fact, there's some estimates out there that banks' Tier 2 capital adequacy ratios could decline by over 2%, which is a fair amount. So there's going to be need for ADB to come in as well to provide either sub debt or equity to help them become more stable and to be able then to provide the backbone for them to be able to reach out and lend to MSMEs and such. So just a couple of things actually in Southeast Asia that we've done is right now we're in the process of negotiating it and getting ready to close a deal in the Philippines that has board approval. So 10 million local currency equivalent debt deal for the Center for Agriculture and Rural Development. It's called CARD, as you guys may be familiar with, for improving access to finance for low-income borrowers. So finding those types of financial institutions that need the access to financing, particularly for local currency, to reduce that risk, and that are continuing to deploy to micro borrowers is very important for us. In Vietnam, we're working with actually closely with the resident mission with Don Lambert, where he will be deploying some funding from the Women's Entrepreneur Financial Initiative, WeFi, that's going to be helping to build more targeted focus towards women borrowers, alongside of some long tenor debt lines that we're doing for MSMEs. And part of that will also be, which is really important with the Vietnamese banks in particular, helping them to track women borrowers and their performance. Again, building that database that helps them analyze the risk, but then the opportunities as well too. So that's a really important One ADB initiative that actually we're working on together. Also in terms of digitization and in terms of helping them reach out further, we have a TA of $1 million with the bank BIDV in Vietnam, which is the largest bank there, to help them again digitize as well as to reach women borrowers. Now, interestingly, which is I think a really important aspect of what the previous panelists were talking about is, we need to not only, of course, digitize the banks themselves, and that will create a lot of movement towards inclusive finance, but actually we really have to be careful in terms of the MSMEs themselves and the borrowers in terms of their digital literacy, as well as then helping them scale up the skills to move into different models or business models that help them diversify how they're going to do business going forward. So we're actually working to push downward to those SMEs. So we're partnering with large systemic banks, for instance, in Georgia, with the Bank of Georgia. So providing not only long-term funding, but also we've designed a COVID-19 Women in Business program. So that's aimed at helping these MSMEs deal with the effects of COVID. So there'll be online training modules catered to WMSMEs that will help them with new strategies. We'll also be onboarding WMSMEs to an e-commerce platform that will help them gain access to a wider network. In terms of other types of initiatives or programs, our microfinance risk participation and guarantee program has been active since about 2000, for about actually 10 years now. And now it's been stepping up and responding to the crisis, working with microfinance institutions. And just this year alone, we provided about 350 million, mobilizing also financing from larger banks. And so we've supported about 1 million borrowers. And just the last thing to give you a flavor of what we're doing is really importantly, 2 weeks ago, we launched the Women's Finance Exchange. We call it the WFX. It's online. And that is an online portal that is going to create a community where we can share knowledge about financing women, helping banks to become more inclusive, but also importantly, bringing that digital component. So offering digital tools and resources, and then building the capacities of these financial institutions and identifying digital solutions for the female business segment. And we're actually also augmenting that with technical assistance grants, and we're busily gathering those, but we're working with WeFi there as well too in Papua New Guinea. And we're providing through one of their main training centers there, SME training to women there, and that's including also digitization. So that's just a little bit of a flavor of what we're doing right now with respect to inclusive finance and the digitization as well too.
That's really good to hear, Christine, all the different projects in different countries that are really targeting women who are one of the most financially unbanked. Can I go back to Yoni? Just to ask, because there's been so much discussion about the role of technology in generating information platform, the role of credit scoring that can actually help us understand the characteristic and even the balance sheet of borrowers, and that could also help expand financial inclusion. But on the other hand, there could also be risk in terms of, for example, one is the security of data and security of borrowing, no? Because I've been hearing a lot of my friends now being hacked online. And then the other concern is you mentioned, for example, the increasing number of players. Like, for example, in the Philippines, I know that GCash was bought by Ant Financial. So this is Alibaba. And the concern is this is actually contributing to less competition. And in particular, while you said the volume of lending through fintech is increasing, what's your experience in terms of the cost of lending, or cost of sending money, or cost of facilitating payment transactions through digital platform?
Thanks, James. There are a lot of questions packed in that in that question. So let me try to answer most of it. To start off with the last question, digital definitely saves and lowers the cost of transaction, and that's sort of universally true across most of the financial services, and especially when it comes to remittance. It's been around for a long time that if you're comparing one-on-one, of course the marginal cost is drastically lower through digital. What actually constitutes the cost of remittance actually has less to do with the technology and more to do with regulations. So I'll just leave it at that. In terms of your concerns for the potential opportunities of using data and alternative resources for credit worthiness, and then the flip side of that risk, there's a lot to be said as well. On one hand, let me give you an example of a company called Trusting Social that I've worked with in the past. So it's they're on AI big data company that works with telco data and plus combination of different data sources that's available to produce trust credit worthiness scores. They're active. They started off in Silicon Valley, active in Vietnam, and has a very close relationship with various Vietnam telcos and expanding, right? And it's a very exciting development. The potential of telco data, especially since the majority makeup of mobile users in Asia are prepaid users. Their top up patterns provides a valuable insight on whether these people can actually pay loans, right? But it's really heartening to see that there are actually companies that are integrating innovative technologies such as AI to really come up with creditworthiness. And I think some of their past experience with big banks have shown that the accuracy of the creditworthiness using various sources, including telco data, has really improved the accuracy of their assessment, which is a good news, right? But then there are a couple issues tied to this. One, as you mentioned, is there's a cybersecurity issue, which has more to do with the cybersecurity readiness of the banks, as well as players that are involved, but also broadly the cybersecurity framework of the countries that these players operate in, and what's asked of them in terms of the baseline security safeguards that these banks have. Financial services institutions are usually subject to more rigorous security measures, and so are telcos. But some of the newer players that are sort of caught in the gray area of licensing and license requirements when it comes to cybersecurity measures. Maybe there's more work to be done to build trust. One, to protect consumer data, but to build trust as well. And there's also a privacy issue that we are all aware of in terms of certain players amassing large consumer data and having very microscopic and rich view of individual players and abusing them potentially. Again, there is raging discussion going on around what's the right way to protect consumer data against some of the hyper platform players. Yeah, again, just want to emphasize the need for having a rigorous data governance framework, but one that also allows alternative use of data sources such as telco for accuracy of creditworthiness, which will, in fact, expand the lendings and the reach of financial services to the low-income population as well as SMEs.
Thank you, Yoni. Any question from, I think one question, Dulce asked a question, but I think Shige has answered the question in the chat box. Any questions from the audience? You can raise your hands or also write the question in the chat box. So if we don't have any questions, what I'll do is I'll invite the panelists to give their 1 minute closing statement in terms of our topic on promoting inclusive finance. So I'll ask Purnima to be the first to share his 1 minute closing statement on promoting inclusive finance in the region. Purnima?
Thanks, James. So in closing, based on our experience in Indonesia as well, so when we say responsible financial inclusion, it's a much more broad approach to facilitating the achievement of SDGs than just the provision of financial services. And financial inclusion itself should be viewed as a means to improve the lives of the poor, but not the sole ingredient. So having a broad vision of financial inclusion, as ADB does, means focusing on the related financial literacy and also the consumer protection aspects. Actually, we have seen that these aspects have not always received, they have received far less attention than compared to the access to finance. So while still fostering a culture of innovation is important. So all of these concepts are complementary. In fact, increasing financial literacy levels usually means a lighter burden on financial regulators. For example, financially educated individuals are less likely to be victimized by financial fraud, which per Interpol has has shown that this has increased dramatically during the COVID period. So I think the global pandemic has also shown us that we need to collaborate because there are a lot of different areas when we are discussing on financial inclusion and digital financial inclusion. And it has also shown us that we perhaps have lost sight of the forest when seeking financial inclusion for its own sake. And one crucial issue that we should definitely not lose sight of in the future is the reason for financial inclusion, to make the lives of the poor less vulnerable to the shocks and more resilient. So until they can emerge from poverty and share equally in all society has to offer. So access to financial services should indeed and at minimum, first ensure that the poor have access to emergency funds in difficult times based on our experience during the pandemic situation. Thank you.
Thank you. Let me now invite Shige to deliver his closing statement. Shige?
Okay, thank you, so James and everyone. So just as a very quickly, in my perception, so what MSMEs need to bounce back is more gross capital, so beyond working capital, to reopen, so maintain, and to grow their business further. For instance, the Indonesia Stock Exchange launched this dedicated equity finance venue for SMEs in 2019, called the Acceleration Board. And also Bursa Malaysia launched this LEAP market in 2017 as an advisor-driven market for emerging companies and SMEs. So I think there's a role of the capital markets will increase further as a growth capital delivery channel to growth-oriented SMEs and also innovative entrepreneurs. So, and the government's MSME policy needs to address more the dedicated SME equity markets. So just I wanted to stress this point. Thank you.
I think well said. The role of the private sector to work hand in hand with government is very important. So I'll now call on Christine, who's coming from the private sector, to give his closing statement.
No, thanks so much. No, I think as my fellow panelists has talked about, it's really important that we approach this holistically. It's such a complicated issue, and it's grown to be more so throughout COVID. But there's a lot of opportunity here. But how do you then push the private sector and the private sector banks to do more lending? And enable them to do more lending. And one thing is that we need to make sure that these banks have great regulatory frameworks in which they exist, so that the regulatory frameworks continue to evolve and move into higher Basel standards as well too, because that then protects the overall financial stability of the bank, allowing it to continue to fund maybe some riskier segments as well too, which is what we've seen in Georgia as well. Then secondly, I would say there needs to be, in terms, really well targeted government and private sector approaches, especially coming out and during COVID, in terms of, what the MSMEs or the individual low-income people are receiving in terms of targeted subsidies, or different types of very targeted guarantee types of programs for the banks, such as what was done in India to help them also, come out of or gain access to finance. Other things I think that we've seen that have been also useful in India, they have priority sector lending targets that are fairly robust. But in India as well too, you have a very, very large non-bank finance market, including MFIs as well as NBFCs, reaching into the missing middle, the MSMEs. And if you look at the financial inclusion versus, for instance, Indonesia in terms of actually access to credit, part of the reason why India, although it's a larger population, is making progress is because there's a regulatory framework that has allowed NBFCs to flourish there. So I would say that piece is very important to the overall puzzle. And then, of course, digitization. Very important for us, will revolutionize it and has been the way that we bank, and then the way that we can reach underserved segments. But again, I think it's very important, though, that we empower and then also educate those underserved segments in terms of understanding the risks there, giving them the tools as well too, and help them as well to modernize their businesses. And that's it for me.
Thank you. I agree. Education and making financial literacy, especially for the underbanked, is also important. Last, I'll invite Yoni to deliver the closing statement.
Thank you, James. Kristen's last point is almost exactly. I echo Kristen's last points around empowering the underserved segments so that they don't fall to the victims of digitalization, which they could and are very prone to. Just as a last point, I just wanted to emphasize that digitalization is very important and will play an important role in promoting financial inclusion, but it's also equally important that the governments have a balanced view of what needs to be promoted and what needs to be regulated. The point around underlying regulations for financial services is great, but promoting entrance of alternative players is also important to foster competition. At the same time, having a full view of the risks that digitalizations bring, use of AI, for example, raises the question around algorithmic decision and whether that's ethical or not, use of alternative data sources, whether a certain player amassing that much insights into consumers without any kind of safeguards, whether that should be promoted or further regulated. I think these are all debates that need further discussion, yeah, I think just having that balanced approach with the goal of achieving universal financial inclusion is important moving forward.
Thank you, Yoni. And I would like to invite all the panelists to turn their video on. And I really thank Christine, Shige, Purnima, and Yoni for sharing your views and knowledge about the topic. I've learned a lot, and I hope the audience also learned a lot. And we are now formally closing the spot. Thank you, guys. Bye.
Thank you.
Thank you.